Good afternoon, morning, everybody, and happy Wednesday, February 4th. My name is Gav Blacksburg. I'm the CEO and founder at Wolf Financial, and you are watching Wolf Financial Live. Today, we welcome Michael Moynihan from the FFF ticker. You can go check it out, Founder ETFs. We're going to be talking today about how to make the world's best founders work for you. A bit of a cheat code in life, one might say. Going to read a disclosure here in a second, and then we'll get into the full thick of this. Michael, how's everything going by you today?
Well, absolutely fantastic. It's great to connect with you and look forward to talking about why we think founders are an exceptional opportunity to direct investment dollars towards.
Yeah, I love it. And before I go ahead and get a little bit deeper into that, do you mind just giving 30 seconds background on yourself?
Yeah, so my background, I started my career in the late 90s at Goldman Sachs on their institutional trading desk. Went on to Sanford Bernstein, where I met some of our team members. And later in, as we talk deeper about the portfolio construction, there's some very Bernstein-esque qualities of it. I went on to become a founder myself, which is really, I think, what got me thinking about the founder mentality and how founders operate differently. I started a wireless networking hardware company. We built a device that allows smartphones to connect where there's no cell service. And about half of our business was consumers, and the other half was military, selling to the most elite special forces that were using the technology to accomplish some of the great things they do to protect our country. So that's how we ended up here. And then my co-founder and I, we had this epiphany. We saw the Fort McHenry flag at the Smithsonian, and it got us thinking about the people that built America and how these people were iconoclasts. And we thought, if we built a public market portfolio with iconoclasts only, how would that perform? So we did a year of research. We looked at an 11,000 stock portfolio over 30 years, and we came to the conclusion and then verified it with various academic work. And there's a great Bain study out that shows that founder-led companies tend to outperform and have a sustainable outperformance advantage over long periods of time. And that's how we got here. We built the Founders 100 portfolio to allow everybody to invest in this, what we believe will be sustainable quality of outperformance of these founder-led companies.
Beautifully put. And we're going to dig a lot further into that. Prior to us doing so, for the investors that are watching, please make sure that you carefully consider a fund's objectives, risks, charges, and expenses prior to investing. The fund's prospectus and the summary prospectus contain that and more information about everything that Founder ETFs is doing. If you want to obtain the fund's prospectus or the summary prospectus, just go right to founderetfs.com, where you can check out as well a lot more about these ETFs and check out the prospectus. And they should be read carefully prior to investing. Excited to be working together with yourself, Sibo, and so many others in this amazing field, because there's a lot that when it comes to investing right now that does scare people. You look at a day like today in the market, right? And it is certainly all over the place. We're seeing 10% drawdowns in major names that people have large allocations to, including some of these founder-led companies. And I think it's really important in an environment like this to have one thing above all else, which is conviction, right? Because a stock going down is not necessarily a bad thing if it is a stock that you have deep conviction in and you're able to now get it on sale. But if you do not have that conviction in the stocks, it's going to be a really tough area, right? Because you might panic sell, you don't know exactly what to do. And I think that's why a lot of people lean towards these type of companies, founder-led companies, to build conviction, because they see that shining star right at the top, whether it is, for a long time, the Jeff Bezos, or nowadays the Mark Zuckerberg and others like those that keep driving things forward. It gives people those long-term ability to have confidence in the stocks, and these stocks traditionally have outperformed. So can you talk to me a little bit about that, this type of market condition, why people really do gravitate towards founder-led companies, and kind of makes this a perfect time to be able to have conviction in something like this ETF?
Yeah, so let's start with long-term conviction, and then we'll get back to some of the short-term gyrations. We are very classical long-term investors. I think we write in our written documentation that this product is meant for people willing to hold at least 5 years or more. And that's because we're trying to play very long-term investment cycles, and we see that founders typically outperform over very long periods of time. And you talk about conviction. What gives us the conviction to invest in this strategy is we looked at very, very long time series of data, right? If you look at the S&P 500, people talk about the 100-year history of it. Long-term investment for the S&P 500, including dividends, is about 10%. So theoretically, if you just buy the S&P over very long periods of time, you should be able to achieve 10% rate of return, at least historically. We don't know that'll happen in the future, but that's what's happened historically. So we looked at founder-led companies for a very long time series as well. As I mentioned, we built a proprietary 11,000 stock database. There's about 1,000 founders running a publicly traded company at any one time. And we looked at that time series over 30 years, and we found that the founder-led companies outperformed the market. And then we sliced it not only the S&P 500, we looked at the NASDAQ 100, and then for sort of the folks that like to look at the high octane stuff, we looked at even the Mag 7. And so looking at those market segments within the Mag 7, for example, Meta, Tesla, and NVIDIA, which are the founder-led companies, drove the outperformance. Okay. Obviously, when Apple was founder-led, it performed better. Google, when founder-led. So we then also looked at the NASDAQ 100. And if you look at the NASDAQ 100 over the last 30 years, the 20 founder-led stocks are driving the recent outperformance and historical outperformance. And same thing in the S&P 500. The current 37 founder-led companies are driving a lot of the performance in the S&P 500. So that's what gives us the conviction to invest in this strategy. And on a day like today, we encourage people, we also encourage people to be, average into position. So today is a great day to continue to average into your position. And you're absolutely right. On a day like today, some of our names are really getting hit. It's a twofold process. Number one, because these are premium companies, they tend to trade at a premium multiple. So that multiple will slightly compress on a day like today. And what's causing today's, sell-off? I saw people trying to talk about stock-specific or even company-specific news yesterday. I really think it's, as Jamie Dimon said earlier in the year, it's concern about global risk and markets versus anything stock-specific. So in an environment like that, not only do your multiples compress, your confidence in forward earnings compresses, and that's going to cause some of these really great names to compress a bit. You're going to see them trade down, but it's a really nice opportunity to keep buying them, because over very long periods of time, these founders tend to react the fastest. And if there is some type of temporary, medium-term, or long-term structural shift in their market, they have the moral authority, the courage, and the execution ability to change the direction of the company, mitigate the risk, and capture the new opportunity. So those are some of the reasons that give us the confidence to invest in these names. And especially on a day like today, where the markets are uncertainty, we view it as an opportunity. Our stocks are on sale. If we liked them yesterday, we really like them today.
So how does your specific fund go about rebalancing, right? Because today you're talking about, hey, there's maybe some opportunity for people, but most often these funds work a little bit different than saying, hey, it's a red day, we're going to go buy. So how does it work for people? If someone's saying, hey, I'm interested, ticker FFF, these companies make sense to me, I already own a lot of them, why not lean into something as a core growth area of my portfolio? How does it work?
Yeah, so that's a great question, and our strategy is fairly quantitative. We wanted to remove all the emotion out of it, right? We just wanted to look at the academic research and apply it
Right.
to portfolio construction. So we own 100 names. They're rebalanced and reconstituted quarterly. So we really only trade about 4 times a year. The only reason we would trade inter period, maybe 2 things: if a CEO leaves. So for example, when Mr. Buffett left, we would sell Berkshire, which we did. Or if there's an IPO that qualifies, we can buy that as well. And then to construct the portfolio, as I mentioned, we looked at these very long time scales of founders. We select the 200 largest founders. And then for anyone familiar with Bernstein research, we run a Bernstein-esque factor model over the top to pull out what we believe are the 100 highest quality opportunities to invest in. It tends to remain the 100 largest, but occasionally a large name won't meet our quantitative metrics on our fundamental model, and it won't be put in the portfolio. So we'll take those 100 names, we'll own them for a quarter, and then we'll look and reconstitute and rebalance. Finally, as people look at portfolio construction, it's a modified market weight portfolio. And what we do to make sure there's not excess exposure in any one name, for the larger sort of mega caps, we cap any one position at rebalance at 7%. So it can drift higher during the quarter as those great companies are performing, but then we'll rebalance to a max of 7% for our biggest positions, so that we have a really well-balanced portfolio. And finally, from a construction perspective, for people that already own some of these names, or to your point, a lot of people that follow you own these names individually. So this is a way to own a basket of them. And for example, if people love a high-profile founder like Elon, they buy Tesla because they see him building in public. Well, The other 99 guys in the portfolio may not be quite as vocal as Elon or on Twitter
Right.
every day, but the aspects that Elon builds as a great founder to his companies, most of those other 99 founders are bringing as well.
What are some under-recognized founder-led companies that you were like, "Wow, like, people probably don't have exposure to this, but this is a gem that they should have in their portfolio, and we're gonna make sure it's in the CTF?"
Great question. And also, people are probably thinking these are mainly tech companies, but we own across all of the sectors. Like one of the great founder-led companies is probably Waste Connections. Like it's a waste removal company. It's one of the great stocks in the market. They have a great CEO. So that's an example of a founder-led company. One of the best performers in the stock market in the last 20 or 30 years has actually been Monster Beverage.
Right?
That's founder-led. In the financials, Capital One, Rich Fairbank is one of the great founders, very strategic. He just bought Discover Networks. So now he'll have a card company, a processor, and a bank, right? So now he can really compete head to head, say, with Amex, which he hasn't been able to do, and he'll get to do over the next decade as well. So those are some of maybe the less known founders. It's not just the guys that you know.
Yeah, it's a great point, and I think that that is where it does get missed a little bit. People can be pretty top heavy into these items, but then a lot of the other stocks in their portfolio either aren't founder led or maybe they're just going into other broad-based ETFs that have some overlap with this, but don't have as much of a direct mission. You've spoken about this emotional connection that gets formed with founders. Can you talk that a little bit more?
Yeah, so I think that one of the reasons this is intuitive for people is we all know someone who's a founder, whether it's the guy running your local pizza shop or local bike shop, all the way up to, this scales all the way up to Jensen and NVIDIA, that the person that starts the business and it's really their baby and their heart and soul, they really invest into it in a way that someone as a hired manager just doesn't, and doesn't have the historical context of how they got there and the emotional willingness to make their company succeed.
Yeah, yeah, that is a good point. Do you think sometimes the founder is it more so that they're willing to put in more time, effort, their own money, right? Things along those lines. How do you see like when you really dig into it?
I think it's all of the above. It's the willing, it's risk taking versus it's good risk taking rather than pure risk mitigation, right? Because to move forward, you've got to take well balanced risks. And I think the founders have a better constitution to do that. They also have the moral authority to do that. For example, I think when you and I talked earlier in the week, it was hot off the news of SpaceX and XAI merging.
Right.
I think if a boardroom CEO tried to merge two companies like that, there'd be a lot of head scratching. But Elon has sort of has shown that he has both the vision and the execution to take pieces like this and put them together in new ways that are valuable for his shareholders.
Yeah, there's some examples of companies as well on the other side of this that you can just see, the founders are gone and that company is just not what it was prior. And, maybe this is, I don't know if this is a great case because the founders were long gone, but like PayPal, right? Like PayPal had that PayPal mafia and they
Yep.
had all these people that were so smart and they're all gone from the company. The company dropped
Yep.
like 20% on earnings yesterday. They swapped out the CEO, just trying not to make a big deal of it. The new guy that's come in, it's just gonna be more corporate stuff, like examples like that, right?
Yeah. So I think the new guy has never run a payments network. I'm not sure if he's run a financials company.
I think it was
Uh,
HP. It
yeah.
was the yeah.
Yeah, and so you're exactly right. You take this, I think had a found one of the founders remained at PayPal, they would probably be the dominant multi-trillion-dollar financial services company. And instead, after the founders left, it kind of languished.
Yeah, exactly. Any other examples that are really good ones like that I'm not thinking of?
A tough one that we saw recently, and maybe we should talk about what defines a founder leader, and it'll also talk about an example we've seen. So, for example, the founder has to remain as an executive as officer, CEO, CTO, CMO. It doesn't work for the chairman. And one of the great contra examples is Phil Knight. Obviously, Nike, one of
Right.
the greatest American companies, arguably most iconic. I love it. He was chairman of the board, and they had a CEO who didn't do a very good job the last 4 years and undid some very basic aspects. So, for example, one of Nike's competitive advantages, they had this great distribution network, whether it be Foot
Yeah.
Locker and Dick's. And so these guys had the low margin high capex start of the business that Nike got to leverage for free. Well, their previous CEO, who maybe didn't quite understand the business that well, said, well, we're going to go all um, digital distribution, not
Right.
understanding how powerful this network was, pulled all the product out, not understanding that these guys were doing the hard, low margin part of the business. And Nike was getting the more fun, I wouldn't say easy, right? It's a difficult business, but they were getting the more fun, high margin part of the business. And so this was a guy who didn't understand the levers within his own business. And that's one of my, so one of the examples that we like to give is that, you gave PayPal, but I think Nike's, for a great American iconic company, kind of a great example of what happens when you don't have someone with founder mentality running it.
Well put. Very well put. Let's take a look for a second here. Couple of slides. So we've mentioned, let me see. Will this just let me present? It's been a while. All right. So you've mentioned some of these companies pointed out on here. People are going to look at, I think, a few here that are just obvious, right? With the Vlad Tenev, Jensen Huang, Mark Zuckerberg, Elon, Karp, uh, Toby, right?
Yep.
Brian, a lot of these are really easy to point out, but then like others, like you mentioned, Monster. I couldn't tell you who the CEO of Monster is. I have no idea off the top of my head. I know AppLovin, did great. I'm also not sure. Salesforce, obviously more obvious, a couple of these others, but it just gives the people a little bit of perspective on some of these founder-run companies that are just continuing to outperform. And speaking of outperformance, a total return basis, outperformed the Nasdaq 100, SP 500 over the last 27 years, which is pretty awesome to see. So this is a nice run back, and this goes all the way up to almost current. You could see that's March of 25 there, and people can see here, this line right here is SP 500. Then you've got Nasdaq 100, which has had amazing CAGR, and then to see this even being outperformed by a founders index right here, which is just great to see, and really just kind of leading the charge here in founder led companies, just continuing to outperform the rest. So wanted to be able to visualize this for people who haven't seen it just yet, and show some of the different companies and the ideas. You spoke a little bit to the Mag 7 as well. Total return of Mag 7 less SP 500, and I think that really shows in terms of which are founder led there as well. And I thought this one was a funny slide when I was looking at it. Mag 7, it's really Mag 3 right here, and you can see those just continuing to push up, and it's just such a stark difference. I mean, I'd be curious to get your thoughts on this chart. Seeing like where it just differentiates from here and just moves up to have an insane CAGR like this versus this is still good growth. People would look at it and say like, hey, it's not bad, but it's nothing compared to this, right?
Yeah, that's absolutely right. These are, yeah, some of these companies are built up very well. They have good management teams, they have good systems, they have a near monopoly product, they still have access to very inexpensive capital, so they're not going away, but they just don't still have the gearing that a founder-led company would.
Yeah, yeah, it's well put. So, speaking of founder, you are a founder. Founded multiple companies at this point, and getting into the ETF world and founding an ETF. I'd be curious to hear a little bit more about what that takes, right? And maybe it's exciting for people as well to be like, "Hey, I want a founder running my founder-led ETF."
Yeah, so I think like all things in life, we need to do things that we're excited about. So we were really excited about this opportunity to bring this to investors of all types. So to start an ETF, as you know, it's a highly regulated industry, right? So the 1940 Investment Act, FINRA, SEC, all regulating the industry. So the basic steps are you've got to set up a trust, and that's really where all of that manages the fund, and that's set up to protect the investing public. That has an independent board who oversees it on behalf of our investors. The plumbing is really done by US Bank. They're the 800-pound gorilla in the space. There's others, but for most ETFs, we run on US Bank's platform. They do all the plumbing, the administration, the custody. So our securities that we buy actually live and get held at US Bank. And then you've got to trade on an exchange. So we had great partners at the CBOE. So we are listed, we're CBOE listed, and they do a great job of making sure that there's great liquidity for our investors. And then we have a lead market maker. The folks at GTS make a market every day in our stock, so that if an investor comes in, GTS is going to price them as close to NAV as they possibly can, running a bid-ask spread. Obviously, they've got to make a little money as well, but they're designated to make a very liquid fair and efficient market as people want to come in and out of the ETF. ETFs are kind of unique in that they can be created or redeemed on the spot. So if, for example, Gav, you want to come in and buy ETF shares that don't even exist, GTS, along with Goldman Sachs as an authorized participant on the backside, will actually make them for you. So they'll go out and they know the basket of securities that we want to own, and they'll make it on the spot. And if for some reason someone decides they have too much of our ETF, they can do the reverse of that and do what's called a redeem and take you out of it. So it's really liquid. We obviously want people to hold this for a very long time. As we said, it's a 5-year greater holding period, but that's kind of how you put it together, and how we as a founder conceptualized all the way from seeing the Fort McHenry flag at the Smithsonian Museum to having it listed and trading on the CBOE with our great partners over there.
Pretty awesome. So that Smithsonian flag, that was the first thought. It was the first time it was like, hey, we should build this.
Absolutely. We were there actually for Tim Sheehy, Senator Sheehy's swearing in. He's a friend of mine. And after the swearing in, somebody there said, have you ever seen the Fort McHenry flag? And I said, no, you got to go. And so we went and looked at it, and it's really inspiring. The thing's about 50 feet wide.
Wow.
And it was the flag that we Patriots flew above the fort after the Brits shelled us. And they shelled all night, and the fort didn't fall. So they put that flag up in the morning, and that's what inspired Francis Scott Key to write the Star Spangled Banner. And it's really, I encourage everyone to go see it. It's really a great part of American history. And it truly, we walked out of there, it was almost a spiritual experience, and walked out of there and said, wow, we looked at some other exhibits in the museum, but said, wow, the people that built America were different. And how do we conceptualize and capture this in an investment strategy?
I love that. And I see Amy from SIBO jumping in the chat, appreciating the shout out. Big fans of SIBO over here, and appreciate you making it possible for funds like this to be listed. I actually was also going to ask, is kind of bouncing off of that, are there any up and coming firms right now, newer founders to the scene, and you're maybe the person that can now find them, right? And bring them to the general public, bring them into a fund like this? Or do you think that by the time they're qualified to be in a fund like this, they're going to be somewhat known?
I think they're going to be somewhat known. And that's one of the things that our research showed, is that if you can drive so deep into the funnel that you found your own company and you go through funding it at A, B, C, taking it public, that filter process to get to being one of the 1,000 founder-led public companies and then the 200 largest, that's part of our selection process to figure out, is this the right product and management talent bringing this? So I don't know that we're the discovery side. We're on the back side of that, of taking companies that have been discovered and packaging them and putting them into a portfolio so that everyday investors can own them to compound their own wealth.
Yeah, I wanted to get your thoughts on this concept, because I've sometimes talked about the S&P 500 like almost being the house. We get to there's this giant casino basically like going on in the country, money flowing hands every day, people making educated bets on what's going to happen, and people can kind of step in one different way or the other. But when you buy, America, right, you're saying, hey, like, I'm just betting on the U.S. economy. I'm the house. Everything kind of comes to me. This is a superpower. This feels like almost like a souped up version of that, right? It's like, I am being the house. I'm betting on America, but I'm only betting on people that are just really taking that entrepreneurial spirit, mashing that with America, taking that to the next level. That to me seems to be where this is falling in. And I guess the question off that is, are all the companies inside US listed? Do you have any interest in looking at some of these international companies? Like, that's become a way that people have gotten exposure to some great international companies, is through ETFs. I'm just curious your thought process there.
Yeah, absolutely. So the first part, we agree that, we don't necessarily think we're smarter than the market, right? We think over the very long periods of time, the market is kind of the long-term winner, but we think we're grabbing the best part of the market and exposing ourselves to that. And then on US versus non-US, by prospectus, we're only allowed to buy US listed companies, right? But some of those can be foreign domiciled or dual domiciled. So you'll see that we own Mercado Libre, which is one of the great Latin American companies. In the past, Spotify, Daniel did step down, so we can't own it anymore. I think Nubank is on there as well. And so we have a couple, we maybe have at any one time in the near term, we'd had sort of 2 to 4 non-US domicile company, again, still US listed. So there is a tiny bit of some of the best ex-US growth in there as well.
Got it. First time I'm hearing Daniel Elk stepped down from Spotify. I guess I missed that part. But hey, sometimes the founders got to take a rest, let others take the watch for a minute. Okay, I wanted to double back as we move towards the last 5-ish minutes of this, just towards kind of focus in on 2026. Like looking a little bit ahead this year, it's starting off pretty interesting already. Tariff talk, things happening with the Fed, other pieces. Investors, I think, are a little bit all over the place wondering, is high beta going to be back in play? Crypto's going everywhere. Just maybe your general thoughts, pulling aside from the ETF talk for a minute, just like general thoughts here on the market and how you think about it and how we'll continue to approach it and how that approach will then simmer down into this ETF.
Right. So I think I would frame it as in geopolitical risk and central bank monetary policy is how I think about the world. And again, we're very long-term investors, so we tend to not dig a ton into the near-term noise. But for people watching and think about the markets and how we think about the markets, we agree with Jamie Dimon that the theme for the medium term for capital markets is going to be geopolitical risk. Again, I saw stock specific stories yesterday as to why the market was selling off. I personally think it's more geopolitical risk and people looking for a reason. So that's number one. And then two, whether it's us or Bitcoin or metals, I think that all assets are showing that we're going to continue to have global central banks, including ours, that are going to continue to print money. And so people are going to want to put their risk capital into assets to protect themselves from money printing. One of the things that we talk about for this product, I've designed it. I want the 19-year-old barista to be able to buy 1 share per paycheck to start their investing journey. And remember, if you're trading your wages for time, inflation is hurting you, and it's hurting you pretty dramatically. The faster you can turn that time into a capital asset, now inflation is working for you. So that's really one of my passions, is how can I help people take their time and turn it into a capital asset as quickly as possible so that geopolitical risk and money printing are in their favor, not working against them.
And do you think stock is the best asset to buy in that case? ETF stock?
Yep. So I'm an equity guy. I've been an equity guy my whole life. I started in equity markets. I run an equity product. I think it's hard pressed to find a better investment than a broad market investment portfolio, whether it be something like us, the SPYs. Over very long periods of time, US equity markets have been a great way to protect and grow your wealth. And so I would be hard pressed to find a better example. But again, for anyone who's younger and wanting to start their investing journey, like whatever you're passionate about, where you can turn into a productive capital asset, great, go do it. I happen to think that equities are a great path. Maybe, I haven't found a better path for myself. And I happen to think FFF is a very great one. And I haven't found something better for myself. But, again, I think equities are the way to really, over very long periods of time, grow your wealth.
Yeah, I would agree. That's where most of my exposure is. Before we wrap up here, just a look. If anybody does want to go check this out, it is founderetfs.com. This is where you can see a lot of the names that are inside of the ETF, right? You can scroll down here and take a look through some of the strategy and the different pieces. Obviously, this is actively managed, right? And that 100 founder led and US listed, the expense ratio and other pieces can be found here as well. A lot of ideology on why founders matter, which we've really covered a lot in this stream as well. So hopefully people are getting the idea here. And then also, like Mike was just saying, right, making inflation work for you in the long term. So you could buy this on pretty much any brokerage. Haven't found a place that doesn't have it. There's some good about and backgrounds, pretty strong background, which, for those that were listening in the beginning, were able to hear. And again, ticker FFF. You can add that to a watch list and begin doing a deeper due diligence process today. Michael, thanks so much for coming on with us today. Any final comments you'd like to share with the audience?
No, thanks for having us on. And, we're portfolio manager driven. So if anyone wants to reach out on the website that you showed, Founder ETFs, or just Michael at Founder ETFs, we're happy to talk to you, and you'll talk right to me as a portfolio manager or someone on the portfolio management team.
There you go. Yeah, I always love it when people make themselves available for outreach. You can check out through there. There is also a Twitter account, which I recommend people go ahead, give a follow to, check out some of the content that's coming from there. It does emphasize a lot of these pieces. And what I like about this is I don't think that this concept or idea is foreign to a lot of people. I think people may have just been trying to do it from a stock picking perspective. And now it's nice to be able to add something like this into your repertoire. That is going to do it for the show today. Thank you to the Founder ETFs team for coming on. Thank you to CBOE for helping to facilitate this. Wishing everybody a great rest of the day in the market. I know it's a bit of a red day out there, but as we talked about, if you have the confidence, right, and the conviction, this can be a strong opportunity as well. So looking forward to it. We'll be back with more content in about an hour and a half. See everybody then. Take care.